Hello everyone, welcome back to Upside Down Data. In this video, we're going to check in on Ethereum and see how it's holding up after the recent crash across the crypto market. So if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter. We put out regular updates there about our risk indicators and more. So what I've got up here on the screen first is the Bitcoin dominance chart. And the reason that I have this up to put Ethereum into context is that we can see that as the price of Bitcoin and the entire crypto market pulled back last week, these are weekly candles, by the way, Bitcoin dominance increased substantially as well. And that indicates that altcoins, including Ethereum, pulled back more substantially than Bitcoin did. And so given that, I thought it would be a good time to take a look at Ethereum, including a look at the Ethereum to Bitcoin ratio to see how it's performing relative to Bitcoin and where it might be headed going forward. So for starters, let's just pull up the Ethereum USD chart. So here are the weekly candles for Ethereum. We can see that it's been a rough ride over the past 2 months. And just like every other asset under the sun, pretty much, the pullback last week was quite dramatic. Ethereum ended up bottoming right around $1,700. It then put in a pretty nice bounce toward the end of the week. You see this long shadow, this wick, and it ended up closing above 2,100. That kind of parallels what we saw with Bitcoin, which closed above 31K, despite pulling all the way back to 25.5K. So the bottoms here reflected a pretty substantial pullback, and yet on Ethereum, as well as on Bitcoin, we saw a bounce into the end of the week, and it closed above this critical level. Now Ethereum is pulling back and testing 2,000 as support once again. If we go back a little bit in time, back to the middle of 2021, especially, we can see that this is a critical level that was tested quite a few times. I mean, this was first turned into support, this 17 to 1800 level, all the way back in, let's say March of 2021. And then it was retested as support in May, again in June, and then again in July before the price put in its final push to the upside. And now here we are, many months later, retesting it again. Now, one reason to consider this to be an important level is apparent if we pull up the VPVR, the visible range volume profile. And the utility of this indicator is to tell us where Ethereum has traded much of its volume in the past. These bars over here on the right indicate what price levels have seen substantial trading action in the past. Now, I'm going to zoom in a little bit here because prices all the way down at about 400 or so, where a lot of volume has traded for Ethereum, are not super relevant to us. We'd like to get a little bit more clarity about levels that are more realistic for the range that we're in now. And when we do that, we can see very clearly that one explanation for why this range has been so important, particularly this range from about 1700 to about 1900, is that simply there's been a lot of action there in the past. A lot of people consider this to be a very important price level. A lot of people very likely have orders waiting in this price range to be filled and may have had those orders set for many months now as the price explored these upper regions before revisiting it now. It's also an important level psychologically. When you see that there's been a lot of volume traded at a particular level, that means that is a very salient number for a lot of people. It reflects a lot of people's cost basis, meaning where they bought into the market, and therefore where they would start to get worried if the price were to dip below. And so, a dip below the 2K level, just as we saw last week, was a very dramatic thing to go through for anyone who's bought above 2K, or even who has bought in the $1,700 to $1,900 range, because all of a sudden your unrealized profits have been wiped away and you're at risk of going into loss. So this provides one explanation for why this is such an important level. It also gives us other levels to look at. This red line here that you can see going across the screen at about 1300 is the point of control. That means within the visible range that we're looking at right now, which is arbitrary. It just reflects the resolution that I've chosen to examine right now. But within this visible range, 1300 is where the most volume has traded. And if the price were to lose this really significant support down to about 1700 and continue on its merry way to the downside, the 1400 level would be a really critical level to be watching for that reason. Now, that also happens to coincide with the previous all-time high. If we were to go back even further in time, all the way back to 2017, 2018, when we saw this first top right at 1400. So that is part of the reason why so much volume has traded here in the past. This first visit up there in January of 2018, and then revisiting it in early 2021. So some confluence there, really important level. So we're really watching here for Ethereum on the US dollar chart, the 1700 to 1900 level, and then the 1300 to 1400 level, with not a lot that's super obvious on the chart in between those ranges. So, the way that the price reacts to this retest of 2K and then down through that $1,700 range is very important. And if we don't see that hold, then we'll be watching that next level of about 13 to 1400. Another thing that's important to look at here, and I'm just going to remove the VPVR before I move over to the ETH BTC chart, is how Ethereum is holding up relative to Bitcoin. It hasn't been a great time for Bitcoin either, but we do see, and this aligns with the Bitcoin dominance chart to some degree, as I showed you at the beginning of the video, we do see that Ethereum has pulled back against Bitcoin in addition to pulling back in absolute terms against the US dollar. So this is again the weekly chart, and pretty substantial drawback of the ETH BTC ratio. If we take it from the top of the wick here all the way down to the bottom of the wick, last week we saw a 13.5% drawdown. If we look at the top of the wick down to the current price, we're at about 12%. So it's been about a 12% drawback on the ETH BTC ratio. And that happens to take us right to this upward sloping trend line, which the ETH BTC ratio has been respecting quite consistently for over a year. So we first touched this trend line in June of 2021. I mean, we could draw this even further back, but I think the most obvious place to start it is here with this wick back in June of 2021, and then revisited this trend line on the ETH BTC ratio again in July, and then again multiple times in October, and then give or take a couple of times already in 2022. January, or even if we don't want to count that, then certainly we got a clear test of this in March. And now here we are 2 months later in May, testing it again. So the ETH USD and the ETH BTC charts differ in this way. This is something that's useful to keep track of because they both have some importance on their own, but they differ in that the ETH USD chart has more of a horizontal structure in its recent price action over the past year or so, whereas the ETH BTC chart has more of a trending structure, meaning that it's been on the move upwards ever so gradually over the past year. And so both charts are now retesting support. Ethereum USD is testing its horizontal support at about 2K, whereas the Ethereum BTC ratio is testing its sloping support at about 0.068 or 0.067. Now, as with the ETH USD chart, if the Ethereum to BTC ratio fails to hold its support that it's currently testing, there is potentially a ways down that it could go. There isn't an obvious support level immediately below this. I mean, it could make stops at some of these previous levels that it tested on its way up on this trend. Now, we can also see on the UDPI, if we pull this up, this is the upside downside potential indicator, which is a risk indicator that's designed to tell you how much realistic upside and downside potential are present for any given asset within a specified time frame. And so we have the long, medium, and short-term time frames. And the range of this scale goes from -5, which indicates lowest risk and most realistic upside potential for that time frame, and +5 over on the right in the red indicates the opposite, highest risk. And we can see that all three time frames, long, medium, and short term, are all in relative agreement with each other. All are below the midpoint, indicating that there is some realistic upside potential, but that at the same time, there is still some realistic downside potential as well. So that kind of converges as well with what we can see on the price charts, which is that, yeah, we've seen a pullback, and that's reflected on the UDPI. So you can see over the past week that the risk indicators have pulled back a bit, below -1, and on the shorter term timeframes approaching -2. And yet we've seen bear market bottoms where the Ethereum UDPIs have pulled back much farther than that. And so we're in a bit of a holding pattern here with Ethereum. We're waiting to see whether it's going to hold these critical supports. We're going to see how Bitcoin responds. And obviously, we need to wait on the macro situation because the Fed is really in control here. And we're just trying to manage risk and to respond strategically as we get more information from them about what their plans are. But this is not to, be all doom and gloom. It's just to say that, if things don't cut our way in terms of the markets in the coming weeks and months, Ethereum will not be spared. At the same time, I think it is worth keeping the even bigger picture in mind, which is that, Ethereum remains strong. Its hash rate, for example, on the network, if we pull up some on-chain data here, is increasing. The fundamentals of the network are strong. The network handled a spike in transaction volume last week during the sell-off. Gas increased, and that was no fun for people who were trying to get out, trying to move into stable coins, panic selling a little bit perhaps, but the fundamentals of the network remain strong. I think that's always important to keep an eye on when we're talking about bearish TA. There's short term, and then there's long term from a TA perspective, and then there's long term from a fundamental utility perspective, which is really the longest term criterion of all. That's what will outlive any given market cycle, any given downturn, any given change in monetary policy. So useful to keep in mind. Hope you guys found this discussion to be valuable, and thanks for watching.